Let's talk about support and resistance levels. Again, in naked trading, naked traders also pay close attention to the support and resistance levels. Support is the price level at which demand is strong enough to prevent the price from falling further, whereas resistance is the levels where selling is strong enough to prevent the price from rising further. These levels offers insights into the points at which the price action historically has had difficulty moving beyond and often signify a place where the price might make a change in direction. Along with support and resistance levels, these help to form what are called trend lines and channels. Again, these trend lines and channels are another method used by price action traders to help see where price might make a change in direction if it has difficulty breaking through, or it might be a position where the price continues going in the current direction. Along with support and resistance, these trend lines and channels offers price action traders another method that they can use to define risk, let them know if the price will continue in one particular direction or this is a place where the price might turn around and go in the opposite direction. There are many chart patterns that develop throughout the trading day or trading session. Chart patterns such as the two-legged pullback, the cup and handle, the head and shoulders, the double top. These are all some basic chart patterns that most traders should understand. Now, while price action traders do not specifically focus on these, it's good to understand what they signify. There's also the candlestick patterns. Specific candlestick patterns such as the doji or engulfing patterns also play a crucial role in naked trading. These patterns are actually a representation of underlying market structures that are developing where the buyers and sellers are doing business at certain levels, and therefore these patterns will emerge. As naked price action traders, we learn to identify what these chart patterns and candlestick patterns signify based on what the underlying price action is doing, and this offers insight into how to make better informed decisions, such as should we exit the position or should we maybe add more size. These are all important aspects of the next section, which is risk management. Naked trading, despite its reliance on pure price action, still necessitates a robust risk management strategy. We should never forget this. This ensures that even when trades do not go as anticipated, our losses can be controlled and limited to a small portion of our risk capital, ensuring that we're able to trade longer and make better informed decisions. Therefore, in sum, naked trading, especially in the context of swing trading, futures such as the NASDAQ E-mini futures contracts, requires a deep understanding of price action, a keen eye for patterns. It is a method that leans heavily on the trader's ability to interpret bear charts, allowing them to react to the market's rhythm and flows, and not some predefined if this then that strategy which will get you destroyed in the futures markets. Understanding price action, a key strategy for swing trading NASDAQ E-mini futures contracts. Price action trading is a method where you learn to interpret and react to the price movements of a security, such as the E-mini NASDAQ futures contract. As price moves, it tells a story. You're essentially learning the language of price, crucial for both day trading and swing trading strategies. It is important to understand that this subjectivity is influenced by market context. You must learn to understand the current context of the NASDAQ E-mini futures markets. Remember, price action trading involves a degree of subjectivity or discretionary trading, and different traders may interpret the same price patterns differently. especially when swing trading. It requires a lot of practice and understanding of market psychology. Like any trading strategy, it doesn't guarantee profits and it involves risks. Always use risk management strategies to protect your capital. Time is not uniformly important in the futures markets, since a strong uptrend or downtrend could be a better trading environment for a certain type of traders, whereas another trader will thrive in consolidation where the market is in a tight trading range. Price action can help you, but there is no one universal trading strategy that will work for every trader. Since all traders are unique and have different personalities, risk tolerances, investment risk capital, etc. Indeed, the importance of time in trading can depend greatly on a trader's personal strategy and style. Some traders thrive in volatile markets, utilizing price action to their advantage when trading futures contracts like the Nasdaq E-mini, while others prefer more stable, range-bound conditions. Traders who utilize a trend-following approach may find strong uptrends or downtrends to be optimal trading environments for swing trading. By analyzing price action, they can attempt to capitalize on the momentum of the markets. They might hold positions for longer periods of time, riding out the trend until it shows signs of reversing. Conversely, or on the other hand, traders who prefer range-bound trading or consolidation periods may look for opportunities to buy at the support level and sell at the resistance level of the range. These traders, keeping a keen eye on price action, often operate on shorter time frames and might make many trades within a single day, profiting from the smaller fluctuations in price on the Nasdaq E-mini. In either case, the concept of time remains an integral part of the trading strategy, even though it may be applied in different ways. Trend traders pay close attention to the duration and strength of a trend over time, while range-bound traders may focus more on frequency and regularity of price action fluctuations within a certain time frame. Ultimately, successful trading is less about the objective importance of factors like time and more about the trader's ability to understand and adapt to the market conditions that best suits their individual trading strategy. The most important factor here is for a trader to understand their own personal style, their risk tolerance, and how they prefer to trade. These factors help influence us, but this still requires a deep comprehension of price action and its implications for market movements and potential profits in instruments like the E-mini Nasdaq futures contracts.